Okay, so what we want to talk about is, will you make a decision to only game plan and trade the ideas that you looked for pre-market, or will you look for new ideas after the market opens? So in other words, you spent, let's say you do your homework 7 p.m. at night on Tuesday looking for stocks to trade on Wednesday. You got your list of stocks. You go to the office on Wednesday morning. You're like, bam, these are my 10 stocks. I am going to nail these guys today. If the market trades well, it opens up, does exactly what it's supposed to do, I am only looking at these stocks today. Market opens up. Let's say 4 out of the 10 do exactly what you expected to. You trade those 4. You let the other 6 go. Now it's 1 o'clock in the afternoon. Do you look for new ideas? Or do you say, I am only going to trade what I spent an hour and 20 minutes last night looking to do? It's a tricky question because it's going to be very easy to go into the day and say, well, everybody else is doing stuff in the afternoon, I might as well. Now, here's the concept that I want to get across to you. If we are looking to capitalize on institutional order flow, what do you believe are the odds that institutions will change their idea intraday? What is your idea? If you had millions and millions and millions of dollars to trade, would you be in and out of the market every other day with a different opinion? No, nobody would be. My point is, actually, you know what? I can't say that categorically. There are some traders who do that. They're in and out of the market all day, but they're not necessarily moving stocks. They're jumping on what other people are doing, but that's not the point. The point is we're talking about the shares that can actually move a stock enough. So here's the concept of what we're talking about. Will you only trade your game plan ideas, or will you look for stuff to do after the market opens? So our job is to hop on the back of institutional order flow. We're going to talk about institutional order flow quite a bit. So when the big money makes a commitment, it's for an absolute minimum of the next quarter or until the company reports again, or maybe if there's bad news comes, maybe if there's unexpected news. But we're talking about more the what normally happens, not what might happen out of the blue, because obviously we're trading for what normally happens. So if I'm big money and I'm making a commitment, I'm like, this company had really good earnings or this company had really bad earnings. I'm looking to build a position over the next quarter, maybe hold it over the next year, whatever it happens to be. When a stock has this imbalance of buying and selling pressure from institutional order flow, we get obvious trends, and we get obvious trends in multiple directions, multiple time frames, depending on whether it's good news, bad news, good institutional order flow, bad or selling order flow. Okay, so we get an obvious trend to trade, and then we put that trend into our game plan. All right. So what do you personally plan to do today if your stock trades against that trend? So let's say let's just pick stock IBM just for argument's sake. You come into the day, IBM's a buy, you definitely want to be a buyer, and IBM trades down today. What do? You came into the day saying, I definitely want to be a buyer of this stock. So you got some decisions to make. All right. In this case here, we're using Chevron stock CVX. Okay, CVX. And this is a weekly chart. So you can clearly see here from middle of February right up until when we're filming this here, which is end of July, clearly good bullish institutional order flow. Okay, there's also some other things going on in there, well bid, energy candlesticks, that kind of stuff. Clearly buying pressure, right? So what happens if you come into the market tomorrow morning and you say, I definitely want to be a buyer of this stock, but today it sells off? Okay, so now here's the daily chart of that same stock. And now we're basically looking at mid-June through the end of July. You can see on the bottom of the chart there, where July 2014 starts. And you can see we had these really nice 4 good candles to the upside, which we're going to label them later energy candles. And then you got a couple of days to pull back, and then another green day. Green day, we're going to find out in a couple of minutes on the candlesticks. That's bullish, short-term bullish price action. But what we want to focus on are these 2 days right here. So we just qualified definitely buying pressure over the last 7 months, definitely buying pressure over the last month and a half, or let's say actually here probably around the last 3 weeks. So we come into the day, we say we definitely want to be a buyer of the stock, and then you get these 2 days here In the midst of all of this clarity on you want to be buying, you have 2 down days. What do? You have solid institutional order flow, buying opportunity for several months. What do you plan to do when there is more selling than buying, when you came into the day being a buyer? Do you buy no matter what? It doesn't matter, I'm buying today, I'm getting long, I'm a buyer. Do you look for something else to trade? Now again, that's a decision. You're leaving your game plan. Because we're assuming that all of the stocks you're looking at, they're either buying opportunities and you're buying them, or now you go and look for another stock to trade that wasn't in your game plan. Do you short sell today's weakness against this much stronger, longer-term institutional buying power? So in other words, do you trade against the long-term trend because today it's going down? Do you call your mama and say, Mama, what do? I'm lost. I'm stuck in a position. Or do you wait for the right time to be a buyer again? Got basically 1, 2, 3, other than calling your mama, you got 4 decisions to make here. You're a buyer no matter what. Do you short and trade against institutions? Now, I kind of was hinting to you what I was saying before. If institutions are long and they're the big money, do you trade against them because today the stock is going down? What are the odds of the probability of being successful against that stock today? Would you leverage up? Would you call it a great trade? So here's what we got. We have a strong stock over time, but we have a weak stock today. Number one, you're a buyer regardless of the intraday price action. So in other words, you're convinced the stock is going higher because it has been going higher and you see no reason to believe it's not going to anymore. You buy no matter what. The market opens, ding, 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 you're a buyer. Why? Because that's what's going on in the stock. Number two, do you look for another stock to trade that's not in your game plan? So in other words, do you look for ideas intraday that you didn't plan for because your game plan is not following through? Do you short sell the intraday weakness in your strong stock? And again, I'll preface it. Do you trade against the last 7 months of buying because today it's weak? Or do you wait for the right time to be a buyer again? Kind of hinted that that's the right answer there, but we'll walk through why. Okay. So next, the answer to number one is kind of yes and no, and number one ties in with number four. So you're going to be a buyer regardless of the intraday price action. The answer to that is yes. And I will flat out tell you, it is a very, very tough situation to make money consistently trading against longer term institutional order flow that's very obvious, like it was in that chart of Chevron that we just showed you, in the chart of CBX. Now, you're going to be a buyer of intraday price action regardless. The second part, it's no. Regardless is no. You are going to be waiting for the right opportunity of when to be a buyer again, and we're going to kind of define those opportunities in the next video when we get into talking about candlesticks. So I am flat out telling you, yes, you can short sell, which is number three, but it's not the right thing to do. So you are going to be a buyer regardless of the intraday price action. It's a question of when, and that might not happen during the day, but the better idea is to be a buyer. Would you look for another stock to trade? So in other words, intraday you go out and you look for something new to trade. Could you do that? Yes. It's very tough to be consistent in the beginning of your trading career. Remember what I said before about defining yourself as a beginner trader. You're a beginner until you're taking money home consistently on a quarter-by-quarter basis. It's difficult for new traders to go out and find new stuff to do after the market opens. Because think about it, you just had 14 hours to come up with good ideas. You're going to find a good idea in 5 minutes? Yeah, you could do that eventually when you become a great trader, but right now your resources, including your experience, are limited. You want to trade the best ideas. Do you short sell intraday weakness against your strong stock? So today it's clearly going down, but it's clearly going up in the longer time frame. Do you trade against that institutional order flow? If you're a beginner, I'm going to suggest no. I'm going to say that emphatically. No. Can you do it? Will you see other people doing it? Yes, and I'm going to tell you exactly how they're doing it. Number one, they're probably doing it because they feel they need to do something. Okay, that will be the majority of the people that are trading against the institutional order flow. Now, again, I am talking about learning how to move from beginner and transform into that professional, accomplished trader. I'm not saying it can't be done. I am trying to get you to the point where you're only focused on great ideas. If somebody decides to do that and they can justify the trade, they have dropped time frames to determine how they're measuring and identifying their edge. So in other words, if you come into the day and say the last month and a half is really strong, I'm going to continue to be the buyer, you're using the last month and a half as your edge, as your bias to say I want to be a buyer of this stock. If the stock is going down today, you're saying I am basing it on the last 3 hours, for example, or maybe the last hour for even 90 minutes. So you're dropping down to a different time frame with a lot less confirmation in actual trades and buying or selling pressure because you're trading the most recent price action. The lower you drop in time frames to determine a trend, the less conviction you could possibly have. Now, you could trade the shorter time frames in the direction of the higher time frames, which gives you more conviction. But in this case, we're clearly talking about we're trading against it and we're dropping down to identify that short-term trend. So last but not least, obviously I gave it away here, number 4, in my opinion, wait for the right time to be a buyer again. And exactly how do you do that? You know, what exactly has to happen for a strong stock that's selling off today, has obvious intraday weakness, for us to eventually become a buyer in that stock again? How do we have that patience to do it? Well, I'm going to tell you, that's a future lesson. But I had to lead up to that. We're going to get to that in a future lesson, and it's really a fascinating one. And I will tell you flat out, when you learn to reevaluate, or what we're going to actually call reset the clock, on when you should be looking to buy or sell again intraday based on what's going on the longer term edge that you've decided, you will be amazed at the consistency that should be pouring out of your positive trading P&L based on that one future lesson alone. So I'm pretty excited to get you to understand that.